Disclaimer, I am not a financial advisor. Do not take anything I say as the truth until you have verified it as truth yourself. So, today we're talking about Forex session timing. I just got done doing a live broadcast on this on our Instagram, Forexia Net, but Instagram is terrible and it doesn't allow you to save the live broadcasts, so I have to make it over again. But this is going to be a lot better. You guys can see there's not a chat in the way. We're going over the Forex session timing. So we know the three main sessions are Asian consolidation, London breakout, and New York session reversal. So Asian session, we have the session marker right here, this blue marker each day. This is the start and end of each day. That's what it marks out. If you're using TradingView, you can right click and go to timescale session breaks and enable that. That's the most important thing you can have on your chart. Delete all your indicators. It's all BS. This, if it was an indicator, it would be the most important indicator that exists. You guys have no idea how important this is. Just knowing when the day starts and ends so you can understand Asian consolidation and understand the entire puzzle, which I'm about to explain right here. Asian session consolidation. Asian session consolidation. Asian session lasts. We can put our mouse right here and go for 10 hours. Okay? Asian session lasts about 10 hours. 10 hours after this line comes London session. Excuse me. Asian session lasts a little bit longer than that, but London session comes right after 10 hours. So you'll see a lot of times there'll be a breakout right into London session. So this little box that we're drawing here to mark out Asian session each day is going to be, you're going to draw it from this line, from the blue session marker, 10 hours, right here. That's 10 hours. And you'll draw your little box. And then you'll see every day, oops, you can see right there, after 10 hours, there's that breakout of London session, London breakout, and then moves the market up for the New York session reversal off of the high right here. Now, we'll get into this more in depth in a second. First, you have to understand the consolidation here. We have, you can extend this box, you can call it, this range, for about 3 to 5 hours behind. And then you can just copy and paste this little box, because the Asian session starts, it actually ends and starts the day in consolidation. So let's widen it a little bit. You can see coming right before London session, we have the breakout of London session. And then if we copy and paste our little box again, do the same thing. It's the same thing. Okay, that's how we know. That's how we're gonna know where Asian session is. And notice where I'm putting it as well. And sometimes it's not perfect like this, but a lot of times it will be. You'll be very, very shocked at how market structure plays out, how repetitive it is. So we have Asian session consolidation. It lasts 8 to 15 hours. 8 to 15 hours of consolidation. You don't want to trade this because, number one, it'll move, maybe it'll be stuck in a range of 20 pips, 20 to 30, maybe 50 pips for 8 to 15 hours. We're looking for moves that are at least 100 pips. For example, this London session move right here was about 91 pips. Now, London session, like I said, it starts exactly 10 hours after the session break marker. So we can just use our little boxes now, like this, like I have drawn out for you guys. So, understanding London session and the New York reversal. We have Asian session consolidation, and then there's the breakout. This was early into London session, late Asian session. It's not always perfect. And then we have the second leg of the W off of the low. This is London session breakout. And then M formation, New York reversal. New York, when does New York happen? For me, it is 7 o'clock in the morning. So, about 7 o'clock in the morning. I'm not sure what time that would be for anyone here, anyone watching, but try to get the session timings down, try to understand it. New York session reversal off of the high, and then here we have London session, London breakout. One thing to note here is we have the low of the day created come London session. Asian session. Asian session created the low of the day. And then come London session, the low of the day was broken. And closed below the low of the day. And another candle, the entire body of the candle closed below the low. That is a confirmation to retail traders to take this trade short because it's closing below that support or resistance line, whatever they want to call that. And then you can see the breakout London session in one candle shot up 70, 80 pips. 80 pips in one 15-minute candle. Hits all the stops that were above the high. Made Asian session. Asian session made the high and the low. London session broke the low, inducing retail traders to sell. Where are the stop losses going to be? Most likely right up here. In one candle, it hits the stops. Comes back up. Retail traders upon seeing this, are going to hop into buys because this is just one massive candle that they can't miss out on, right? That's apparently momentum and all that stuff, right? Yet they do not take into consideration New York session is right around the corner, and M formation off of the high of the day reversal come and does the same thing over. All right, this was actually Sunday, Friday, and then Sunday market open. So we have the gap right there. We have a new week, Asian session consolidation, London session breakout of that consolidation, and then New York session reversal, which would have been right around here, did not actually happen. So there will be times that there is not a perfect structure. Okay, this isn't a perfect 100% strategy. This isn't really even a strategy. I'm just showing you what happens when it happens and how it happens. I'm not telling you to buy or sell or anything. That's up to you. Use this with maybe other strategies. Use this with the M and W formation pattern strategy that I give you, or go with the trend doing this. There's a lot of ways to trade this. So, Asian session, consolidation, come early Asian session, early London session, late Asian session, we have the breakout, London session, come New York, they have the reversal off of the high. Asian session, and you can see we're just going with the trend. So, London session, they move with the trend. New York session, they go against the trend. London session, they go with the trend. New York, they go against the trend. Asian session consolidation here is just to extend time. Okay? It's to get retail traders out of their positions and to accumulate orders. The retail trader, most retail traders, especially in the US, where a lot of the liquidity is from retail traders, they're trading this red zone. We don't trade the red zone. Yet a lot of people do, not knowing that this is actually what happens. There's just consolidation for an extended period of time. So, going with the uptrend, we have London session. Going with the trend, breaking out of that consolidation, New York reversal. London session, New York reversal. New York reversal almost always is going to have the M formation if it's going against the trend and it's an uptrend. If it's going, and then vice versa. So, we have the structure right here, the perfect structure of Sunday, Monday. This is how it all fits together, you guys. Then we have Tuesday. Actually, very few people know about the Tuesday reversal. So, I guess I'll talk a little bit about it. We have Sunday, Monday. The dealer creates Sunday, Monday, Tuesday. The dealer will create a fake trend to induce retail traders one direction, and then come Tuesday, Wednesday, they'll hit the stops. So in this case, it was a midweek reversal or Tuesday reversal, whichever one. The head and shoulders right here was created, or you could say this was the head and shoulders. And the retail traders that were buying into the head of the head and shoulders, not knowing it, got trapped at the high of the week. So we can see here the high of the week. This was the high of the previous day, high of Sunday, Monday, right here. Retail traders bought into the breakout of the previous day's high. Come New York session, we have the reversal off of that high. Asian session consolidation, London breakout. It's the same thing, very repetitive, you guys, but it's what market structure is. And a lot of people do not teach this, and it's the most important thing that should be taught. Market structure. Take your indicators off. Learn how to trade without the need for indicators. So here we can see the same thing happened, where they confirm to retail traders that they're going one way, when in reality they are not going that way. They're going the exact opposite. So Asian session consolidation, fake out retail traders to the low. They break out of Asian session. Remember, London session right here. London session starts. They actually create a fake low right here, right at the exact low of the previous day, and then one candle hit the stops and induce everyone to start selling. And then that next candle to confirm to the sellers that the trend will continue down, or the candlestick apparently confirms to sellers that it will continue downward or whatever. Here we have New York session reversal and formation off of the high. So this is very, 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 very repetitive, you guys, and it's pretty easy to see once you know how to map it out. So here we go once again. It was Asian session consolidation for like 15 hours. Let's see. Yep, 15 hours and 15 minutes of of a 28 pip movement. That's nothing. Here we have this move. In 5 hours, the market moved 163 pips. That's insane. Why would you even think about trading Asian consolidation? It doesn't make any sense. So Asian session consolidation, NFP, we have NFP. This is NFP Friday. Then we have Sunday, Monday, market open here. But more importantly, NFP Friday, we had the London session breakout, NFP Friday, inducing retail traders to buy the breakout of this. Not only did they have a trend line here, but that head and shoulders, and also the high of the previous day. So the high of the previous day is this red zone right here. There's going to be loads of liquidity at the high of this previous day. Why is that? Because retail traders believe that a characteristic of a uptrending market is the trend making higher highs and higher lows. So, what did the dealer do? The dealer grabs all the liquidity at the high here and then reverses off of that high. Does not break that high, and the New York session comes and reverses to end the day in consolidation and begin the next day in consolidation. So, if you guys did enjoy, give this video a thumbs up, subscribe, and also follow us on Instagram for daily education and all that good stuff. Peace out.